The World Economic Forum estimates that tokenization could target up to $867 trillion in financial assets, representing nearly all global assets. That's trillion with a T. For those not aware, tokenization is the representation of anything of value as a digital token on a blockchain. We have lots to get into today, some of the biggest players in the world, continuing to talk about the value add of blockchain, distributed ledger, and crypto technology, and how it's going to be embedded in our everyday lives. Give a shout out to Chainlink here. This is pages.chain.link. This is not sponsored by them, but they just put out a pretty long document on all of their product offerings and integrations. But what we're going to talk about here is a little bit broader and current asset tokenization. We mentioned that 867 trillion number from World Economic Forum. Currently, you can see here 275 billion on chain for DeFi or decentralized finance, 3.2 trillion total for crypto, and tokenized real world assets 328 billion. Now that's including stablecoins. Excluding stablecoins, so just normal real world assets out there in the wild, bonds, stocks, things like that, right around 40 billion right now. And you get into the opportunity, all of the stuff that is not shaded in 100 trillion in debt markets, 110 trillion in global currencies, 123 trillion in the stock market, $380 trillion in global real estate, 1 quadrillion in derivatives, 33 trillion in global trade, 22.7 trillion in gold, 7 trillion in insurance, 1.1 trillion in global advertising, $400 billion in the gaming industry, and hundreds of more industries still yet to be tokenized and on chain. And you get into a future of potential asset tokenization, and it is the same things, those gigantic numbers that we just mentioned. That is the market opportunity here. And I think that it's easy to kind of just say these crazy things, because I'm sure even back at kind of the adventation of when the internet started kind of taking off and everybody was launching websites in the .com bubble, there were some gigantic things thrown around back then too. But these aren't just, these kind of crazy numbers thrown around. Right now, we have some of the biggest institutions on the entire planet talking about the next 5 years. And by 2030, Boston Consulting Group, along with many others, these numbers are pretty on par with each other. They do range from like 3 trillion to, 30, 40 trillion. Boston Consulting Group, $16 trillion of tokenized assets by 2030. That's one of the 4 biggest professional services firms on the entire planet telling you what's coming. You have Citigroup, one of the largest banking entities on the planet, saying that stablecoins and digital money will be at $3.7 trillion by 2030. Now, $3.7 trillion in stablecoins by 2030. We have to go back and look at where we're at right now for all of crypto. All of crypto, including stablecoins right now, is only at 3.2 trillion. So if by 2030, stablecoins alone are at 3.7 trillion, got to wonder what crypto is going to be at as a whole. For those not aware, I'll give a shout out here and I'll move on. Chainlink has a lot of integrations with Swift, DTCC, many, many more entities. You can scroll down far enough. You see Euroclear, Mastercard, and some of these other ones as well. Probably going to reference back to that a few times over the next months and years, because it seems like a pretty well put together document. International Monetary Fund. This is just coming out over the past 24 hours, I believe, as well. Putting out an Understanding Stablecoins document. Now, I'm certainly not going to read through 56 pages. But again, for context for you guys, some analysts expect asset tokenization to reach 16 trillion or 10% of global GDP by 2030. That's the same exact figure the International Monetary Fund, one of the largest kind of financial organizations on the planet, alongside Bank for International Settlements and a few others, that's Chainlink just gave you the same number in their documentation. Scroll down through here, and you talk about some of the trading volumes right now. The 2 biggest stablecoins, Tether and USDC out of Circle, $23 trillion in 2024. And yeah, kind of get the picture here from the International Monetary Fund. these just gigantic research reports on digital money, understanding stablecoins, and we're just beginning to start seeing these tokenized bank deposits as kind of a thing now too. Collective engagement to exchange readily available information on immovable property. Nothing crazy here, but I did find this document and I think it's interesting enough to share. This is a joint statement on December 4th. Don't ask me how I always stumble across this random stuff. Belgium, Brazil, Chile, Costa Rica, Finland, France, Germany, Greece, Iceland, Ireland, Italy, Korea, Lithuania, Malta, New Zealand, Norway, Peru, Portugal, Romania, Slovenia, South Africa, Spain, Sweden, and the UK, and the UK's overseas territory of Gibraltar issue this joint statement. In recent years, tax policy developments have greatly enhanced cross-border exchange of tax information and international cooperation between tax administrations, combating offshore tax non-compliance, tax secrecy, etc., etc. Despite these significant advances, there's not yet a mechanism for jurisdictions to exchange info on non-financial assets, especially immovable property. What we get into here is essentially they're talking about delivering transparency through automatic exchange of financial assets and crypto assets. So recognizing that ownership and transactions involving immovable property often have cross-border elements, they're essentially adopting this IPI MCAA, which is an important step in delivering tax transparency of non-financial assets, et cetera, et cetera. It's just interesting how, to me, you see these countries kind of collaborating on different things. I think there's going to have to be collective engagement on the crypto stuff as well here in some regards. European Banking Authority putting out a risk assessment questionnaire. Again, I told you I'm just shotgunning some stuff. I found some stuff here. This is question 8. Now, I guess for context, let me go back to the beginning so you guys know what they're even talking about here. I think this is like 85 or 88 banks. European Banking Authority conducts semi-annual risk assessment questionnaires among banks. This booklet provides a summary of the responses to the survey carried out in autumn 2025, in which 85 banks submitted their answers. Results of the survey were received in September of 2025 and are presented in an aggregate form, et cetera, et cetera. Crypto in here, right here, is what's interesting. Question 28 from autumn of 2025. Are you providing or do you expect to provide any of the following crypto asset products and services to retail or wholesale clients within the next years? They don't specify how many years, but again, this is 88 banks in the Eurozone. Issuance of Now, again, I'm colorblind here, so you guys might have to look at this better, probably look at this better than I can. But you can see issuance of e-money tokens, issuance of asset reference tokens. I'm imagining that's probably tokenized real world assets, tokenized deposits, other crypto assets that are falling under MiCA or markets and crypto assets, other type of non-MiCA scope tokenized assets, et cetera, et cetera. And these numbers are just going to slowly creep up to probably 100% within the next couple of decades, obviously. I think that the writing's kind of on the wall at this point. I think most people would probably agree. And I actually did an interview. I can't say who I did the interview with, but it was just over the past 24 hours. One of the largest e-commerce brands kind of on the planet. And, even in these, traditionally public companies where they can't say a whole lot, they're basically mentioning like it is at the point now where not only banks, but just pretty much businesses in general, large businesses in general, are at the point where they're just going to have to adopt digital money. At the very baseline, like stablecoins are being widely adopted, and entities that don't adopt stablecoins are going to have a really hard time, not only competing in a handful of years, but being around. So I found that to be pretty interesting. I found this document as well. Now this is communication from the commission, blah, 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 blah. Let's see what we got here. Looks like efforts are going to be directed towards enhancing the use of technology such as advanced analytics and artificial intelligence to track crypto asset transactions, focusing on the financial operations of criminal organizations. Particularly, I've never seen this term, I obviously know what SaaS is and software as a service and stuff like that. This is CAS, crime as a service scenarios. So it looks like AI and advanced analytics are going to be used to track crypto. The UK, this comes out a couple of days ago, just taking a significant leap forward with the property, hashtag digital assets, etc. Bill receiving royal assent. This coming out of Quant Network, but always paying attention to what comes out of Quant Network. These guys are embedded, especially in the UK, especially in Europe as well. The new law formally recognizes cryptos, stablecoins, and other digital assets as personal property under UK law. This sets the UK up for digital assets and tokenized money globally. As finance moves on chain, with all our assets being tokenized, he's talking about all global assets. This legislation sets the UK apart and creates the certainty for economies to trade in the UK. With approximately 12% of UK adults now owning crypto, this legal framework positions the country as a leader in digital asset regulation, offering the clarity, et cetera, et cetera. The future of finance is being built on chain. The UK is laying the legal foundations to lead it. I'll share that link with you if you guys want to read the full legislation. But I always like these stats. This, with approximately 12% of UK adults, and we see stats for the US too that are like with approximately 15% of US citizens owning crypto. And I'm not so interested in how many people in the US own crypto because, yeah, it's a cool stat. I think it's more of a vanity stat. I think any of those, how many people, because I don't care about some random person that owned Fartcoin 2 years ago. I think it's much more interesting to get into how many daily active users, what percent of American citizens or UK citizens or take a country citizens are daily active users of blockchain DLT. And it can't even be 1%. That's how early I believe we are in blockchain, distributed ledger, and crypto adoption. Because as I've mentioned many times, I believe that crypto, blockchain, DLT, they're just going to be a part of our daily lives. And right now, way less than 1% daily active users for nations, citizens, especially in the US, UK, places like that. Maybe in other areas it's more, but I've got to imagine, some of these bigger nations, it's very, very small. Here's the legislation. Go to legislation.gov.uk and find it here. But provision the type of things that are not prevented from being objects of personal property rights. I found this today. This is coming out of Ripple and XRP, opportunities and risks for a growing financial infrastructure. This looks like this is older. I thought it was newer, so I'm going to skip over it. You can go and find this, though. da.solutions, like a white paper. Now, what's weird here is that this is telling me it's a 12 date, so maybe I'll briefly go over it. But this looks like it's September, because I'm assuming that I'm reading Switzerland date format, September 2nd, but it doesn't look like it was published until December. Ripple and XRP, opportunities and risks of a growing financial infrastructure. It talks about on-demand liquidity, which is interesting because you see these documents, and I know that I still see the from a lot of people, the term RippleNet, and I'm pretty sure, you guys can correct me if I'm wrong, pretty sure Ripple just rebranded everything to Ripple Payments, and everything just wrapped up into Ripple Payments. So on-demand liquidity, XVIA, XCurrent, XRapid, which was I think before they even termed on-demand liquidity. And then, RippleNet, actually remembering back all the way to 2019, 2020, the earlier documentation from Ripple in 2016 and 17, I think it was called Ripple Cloud or Ripple Paint. I think it was RC Cloud, Ripple Cloud or something. So anyways, pretty interesting, but it does talk about kind of the fortified position for cross-border payments, stuff like that. But you guys can, I'm sure somebody will find that research report and repurpose it for whatever they want to repurpose it for. Hedera has 9 million plus accounts on mainnet and counting. This indicates a strong signal of onboarding at scale and a bigger base for apps to reach with real utility. What's really crazy is 9 million accounts. When I first started talking about Hedera, way before Genfinity or any of that stuff, actually the first interview I ever did in crypto was with Christian Hasker, former CMO of Hedera, back in 2020. But I remember in 2019 participating in open beta of something that was called Daily Timestamp. And you essentially, I think it was like a 3-week program. You could create a wallet and you would read articles and get streamed HBAR and micropayments. And I actually found that OG wallet, and it's like a sub 2,500 wallet. So less than 2,500 wallets were created on Hedera mainnet when I created that first one. And now there's 9 million plus accounts. So that is wild. And trust me, I've definitely made a lot of mistakes with different networks and stuff like that in the past. But I will say there was a lot of flack back then because all I was talking about was like XRP and Ripple stuff back in like 2020. And I remember Hedera, I don't even think HBAR was in the top 100 back in 2020. And when you're talking about stuff like that, that is really early, it's pretty interesting, the type of stuff that you get. And I think HBAR went up to like 11th or something within the past year, which was it was wild to watch. But anyways, 9 million accounts is pretty awesome. I think there was something similar. Yeah. So this was out of that previous report that I just shared with you guys, but this was pretty interesting here. This is XRP. Active. Now they're pulling metrics from late 2024 into 2025. So obviously there's a lot, more recent metrics here, but I think still interestingly of note, just new addresses, and you get into how many addresses you can kind of see here. So thought that was pretty interesting. Archax executing first on-chain. This is on genfinity.io. You can certainly go here and read all this stuff that we push out. Archax executing the first on-chain ETF trade on Hedera, making history. The first on-chain transaction of the Canary Funds HBAR ETF on Hedera, demonstrating how tokenized assets can trade beyond traditional market hours while maintaining regulatory compliance. Now, Archax should ring a bell to anybody watching this from multiple networks because they have integrations from Algorand to XDC, XRPL, Hedera, and more. Avalanche, Solana, I think. So this is pretty awesome, though. I think the inflows of XRP ETFs were pretty massive. This is coming out on December 2nd here. 67.74 million, 45 ETH. You can kind of see where we're going here. But anyways, again, like I mentioned, I don't have like a huge script for this one. I did want to do a video today. Let me see if there's anything else new here. Newer. CNN and Kalshi joined forces. So it looks like a prediction market joining forces with CNN, which is pretty wild. GFM Review awarding Hedera with best Web3 dev tools. I'll read that one real quick. I do think it's interesting because in alignment with that interview I just did, I think that, and I've heard this from multiple interviews actually, from a lot of these like professional services firms too, is that these enterprises and institutions really need the ability to rapidly deploy prototypes to test out the technology. And I think that we're getting to a point where it's becoming much easier to do things like that just because of the tooling that all of the developers and across these blockchains have been pushing out. But best Web3 developer tooling North America 2025 by Global Financial Markets Review, et cetera, et cetera. You can read through here if you want to. And as I mentioned, this is the type of stuff I'm talking about. And I'm sure you could reference, different examples across different networks, but Hedera Asset Tokenization Studio, you have the AI studio, you have the stablecoin studio, et cetera, et cetera. And it's just enabling these institutions and enterprises to deploy proof of concepts way quicker. Because I think that's some of the stuff that we were like missing for a while across crypto, is just the ability to rapidly deploy things. Because these proof of concepts, I mean, you can take XRPL, you can take Hedera, you can take any network. When you're trying to value add into the traditional system and you have millions or billions of people at risk if something goes wrong, when you end up going live with global banking or with, these gigantic commerce brands, stuff can go wrong pretty quick when there's millions and billions of people that utilize these systems. So these proof of concepts take like years sometimes. I mean, I know for a fact, like even, and I didn't even mention this, I probably should have done some more on this. Some of the AP Plus, Australian Payments Plus, Reserve Bank of Australia, Project Acacia, digital money trials have been issued on Hedera mainnet at this point in time. So this is like, you know, the central bank out of Australia issuing stuff in test environment. You know, this is on mainnet, but it's obviously just being tested right now for stablecoins, digital money, things like that. But those proof of concept, just in one example. I mean, I remember finding stuff like that from EFTPOS before they merged with NPP in Australia and the one other entity I always forget. I remember finding those proof of concepts back in like 2020 and diving into that stuff. 2020, 2021. So like 4 years later, we're seeing more kind of trials. So, you know, I don't know. I'm rambling at this point in time. Anyways, I do think it's pretty crazy when you start thinking about some of the numbers of what's actually going to be tokenized on these networks. I mean, you have the biggest individuals from the biggest companies on the entire planet. I think the last video I did, I mentioned that Bank of America said 4% is what they're advocating for their wealth clients to, you know, put into crypto and digital assets. 4%. BlackRock's Larry Fink saying he was wrong about Bitcoin. I think I saw something on Twitter saying, you know, there was like a quote of Larry Fink saying, don't be surprised if Bitcoin goes to 700K or something. And obviously not financial advice from me, but yeah. Anyways, I hope you guys enjoyed this. 20 minutes, I think, is long enough for me to ramble on a video. And I will talk to you guys when I talk to you. Please like and subscribe. Do whatever the cool kids do to hype this and share it. It does help. And I'll talk to you guys when I talk to you. Thanks. Bye.